Hello everybody, it's Yashar here, back again with another video. And in this video, I'm going to talk about my own portfolio and update you on my positions, the return of the portfolio, and a few changes to this portfolio during the last month. As I mentioned in the past, a lot of YouTubers out there don't really want to share their portfolio performance when we are in a bear market and everything goes down. And I agree, it's really not fun to be down 10, 20, 30%, and you probably look stupid in the eyes of your subscribers. When you share your portfolio publicly, of course you receive negative comment like this one, which is, of course, means this person has no idea about the stock market and probably thinks stocks should only go up. But the point is, people start to question your methods and make fun of you. That's why most of the YouTubers don't share their portfolio performance when the market is down, but always show it when the market is up and they can look like genius. For me, it's the other way around. I never shared my portfolio performance when I was up 30% in 2021, but I think it's more important to share my portfolio performance with my audience when the market is down and my portfolio is down, and show everybody a process. If you're investing in the stock market, you should prepare yourself to be down 50% in the short term. Even the best investors in the world were down 50% plus in the short term. I can give you examples of Peter Lynch, Warren Buffett, and Bill Ackman. But what is important is the long-term performance. I like to keep it real and demonstrate the process of long-term investing here. While the short-term performance doesn't really matter, I always like to compare the performance of my portfolio with S&P 500 as the average return of the US stock market in the long run. And my goal is to be able to beat this index in terms of the return by a good margin over the next 10 years. I used pretty much all of my investment in 2020 to buy a house, and therefore I started this new portfolio in January 2021 and slowly dollar cost average into stocks that I found them undervalued or fairly valued but with a great quality. I will try to update you each month with full transparency and show you the exact performance of my portfolio and also my wife portfolio, which we consider them a grand portfolio here. So yeah, I first just want to start with the asset allocation, and as you can see here, most of our net worth, I mean me and my wife, is in real estate at the moment. And this is the house that we bought recently. So next we have stocks, which I divide them geographically into Canadian stocks, US stocks, and Chinese stocks, and I have a small stake in crypto as well. Right now we have 0% allocation to Chinese stocks, but it probably changes in the coming months, and I will start a small position in the Chinese business to get some international exposure. This is the Excel sheet that I use to track my personal investments and also my wife investments as one grand portfolio. And as you can see here, all of these investments are in red in terms of the return, except Google and Amazon. The important metric here that are basically the total return of this portfolio, which is minus 7.7% from January 2021 to date. Of course, the dollar cost average into the market, and most of our deposits were late 2021. The portfolio annual dividend is close to $1,300 per year, up almost $100 from the last month, which is totally tax-free as well, as all of our dividend stocks are inside the TFSA. And the yield of the portfolio is 1.75%. This is a nice graphical representation of the stocks we hold in this grand portfolio. The majority of these positions are tech and financial stocks, mixed with some REITs and consumer discretionary stocks. I absolutely want to add consumer staples, industrials, and energy stocks in the future when those sectors go through a correction cycle. This is where I track the returns of our grand portfolio against S&P 500 and also our initial deposits. As you can see here, we consistently deposit cash and buy stocks in these portfolios. Unfortunately, the performance of our portfolio was better than S&P 500 in the last few months, which is mainly due to good performance of Canadian stocks and of course Google. Okay, now let's look at my personal Wealthsimple invest account, excluding my wife holdings in her own portfolio. Overall, I have close to 53,000 Canadian dollar worth of stocks in this account at the moment. My TFSA, which is mostly Canadian companies, performed very well actually, and it is basically flat, which is actually great performance in my opinion during a bear market. I analyzed pretty much all of these stocks before on the channel, and will leave a link to those videos in the description box below. In the US side of my TFSA, Google is the only position I hold, and as you can see, after the stock split, I now have 50 shares of Google here. I had 60 shares of Google, but what I did in the last month was a little bit of rebalancing of my portfolio. So my goal is to hold my Canadian stocks in my TFSA and my US and Chinese stocks in my RRSP in the long run. So I slowly started to sell my Google shares here in TFSA and buy back the Google shares in my RRSP. So I sold 10 shares here and bought them back in RRSP. Google for me is still in green by 20%, which is absolutely amazing performance, even considering the recent market correction. At some point I was up close to 60% on my Google position, but it is what it is. My plan for Google is to just hold it during this crash and eventually shift my holdings from TFSA to RRSP. On Canadian side of my TFSA, we have a very stable performance and I didn't have any major changes here in the past month other than buying the dip on my positions using the cash that I generated from shuffling Google shares from TFSA to RRSP. Here we have Aritzia, which is a growth-focused Canadian fashion stock, and I'm down over 11% on this position at the moment. I want to increase my ownership in Aritzia, and my goal is to buy another 40 shares to have 100 shares of Aritzia inside my TFSA. The next position is Brookfield Asset Management, or BAM. I'm down almost 11% on this position too at the moment, but I don't have plan to buy more shares of BAM at this point, as I'm happy with the number of shares I own, unless it goes down another 20% or so, and at that point I will buy more shares of BAM. The next two positions are Bank of Nova Scotia and EQ Bank, which are both amazing Canadian banks. In fact, EQ Bank is absolutely undervalued in my opinion at the moment. I'm down 13 and 14% on these two positions respectively. I bought 10 shares of EQ Bank and 6 shares of Bank of Nova Scotia in the past month to bring my average cost down. I think I'm happy with the number of shares I own in EQ Bank, but I will try to add to Bank of Nova Scotia in the coming months. Next, I have two REITs, Granite REIT, which is an industrial real estate company with many large warehouses around Canada, US and Europe. And also Killam REIT, which is a residential real estate company in Eastern Canada. Both are amazing REITs with both growth potential and consistently monthly dividends. I'm down 12 and 13% on these two positions. I bought a few more shares of Killam in the past month to bring my average cost down. Next, I have Power Corporation of Canada, which is mainly an insurance business with a strong balance sheet and consistent dividend increases. I'm down almost 11% on this position too. I bought 5 more shares of Power Corp in the last month. Finally, we have TD Bank, which is down by only 2%, and I bought 3 more shares of TD in the past month. I think I would never sell my TD and Bank of Nova Scotia shares in this portfolio. Next, let's look at RRSP. My plan is to hold mostly my US and Chinese stocks here. So as I mentioned before, I bought 10 shares of Google here and sold 10 shares of Google inside my TFSA. My plan for Google is to buy 50 more shares of Google here by the end of the year. My biggest investment here so far is Meta Platforms or Facebook, which is down 42% with a terrible performance. But I'm absolutely sure that Meta will rebound in the future, as it is definitely undervalued here. I actually rebalanced my portfolio a bit and trimmed a few shares of Meta to buy Google and 1 more share of Amazon here when Meta had a huge explosive upward move in the last month. My plan was to rebalance the whole portfolio and buy back more shares of Meta and Google by the end of the year. So my goal is to own 40 shares of Meta and 60 shares of Google here. I will consistently try to add to my shares in Amazon and PayPal as well during this market crash. And if I want to talk about the goals, my goal is to own 50 shares of PayPal and 50 shares of Amazon. So overall, my plan with all these stocks, as I show you here, is to hold or add to them during these dips. Even if I go down another 20%, I would not sell any of these stocks here and I will not going to cash out. I analyze each and every stock I buy, and therefore I'm not going to emotionally react to price action of these stocks. These are my assets and I know the value of my assets, so I'm not going to sell them for low offers out there. There you are guys, I hope you enjoyed the video and my transparency in showing you all the positions I have in my portfolio and also the performance of my stocks. If you enjoyed the video, consider subscribing to the channel to see similar videos. Thank you for watching and I see you in the next video. Farewell.